Hello everyone, my name is James Brannan, Authorised Representative at AlphaNode. Today I'm joined by Ryan Hodges. He's the Managing Director and CEO of Zodia Custody Australia. Ryan brings over 2 decades of experience in traditional finance, holding senior roles at Westpac and Commonwealth Bank before stepping into the digital asset world to lead Zodia's Australian business. For those who haven't come across Zodia, it's an institution-first digital asset custodian backed by Standard Chartered Bank, NAB Ventures, Northern Trust, SBI Holdings, and Emiratis NBD. They were also recently the first global custodian to support AUDM, Australia's first regulated stablecoin issued by Macropod. Ryan also sits on the Executive Council of Blockchain Forum New Zealand and has been a member of the Digital Economy Council of Australia since 2021. So he's been close to the regulatory and institutional conversation in this market for a long time. Today we're going to dig into where institutional digital asset custody is heading in Australia, what the new draft legislation actually means for the industry, and whether advisors, accountants, investors, and SMSF trustees should be paying attention to right now. Ryan, welcome to the show.
Thank you. Nice to be here. Appreciate it.
Yep, good to have you, mate. So just quickly, before we get into all the questions, so we're crossing 81,000 in Bitcoin now, so up 33% from the 60,000 lows. What's your pulse on the market right now?
Oh, look, I think it's conservative at the moment in terms from a price perspective, is my view. Probably not, I wouldn't call that a Zodia custody view, but I think we've got a lot more positive movement, positive signals, and I think that's, for everyone in this market, that's it's good for us in terms of what we can see at the moment. So I think we've got a long way to go in terms of, shoring up the pricing side, but I think we're in positive territory is my view.
Yeah, it seems to have turned the corner, but of course we're always one post away or a missile strike away from the market completely ripping the bottom out from underneath itself. But you spent over 20 years in traditional finance, so working at Westpac and CBA before joining Zodia. A lot of people see, the big banks somewhat in opposition to the digital asset sector, that, accounts can get frozen, transactions blocked, etc. What made you jump across from, time in the big four into the digital asset sector? Yeah,
good question. So I think, like many people who have come into the sector, I think it started for me with investing in digital assets personally. So being from a bank originally, I was very risk adverse to digital assets and cryptocurrency. And, I did have a few friends mention it to me a few times. This is 2013, a long time ago. And I was always like, it's not really for me. But I think it got to a point where some people close to me who, I valued their opinion strongly, suggested I review it a bit more. And so I took a leap, started investing into both, what I call the big caps and the small caps, and the, those ones that, fly-by-nighters and the rug pulls. And I think I learned a lot from both sides. But the thing that stood out for me, because I was working in distribution for a bank, there was a lot of crossover in terms of challenges we had in that specific time that we could solve with the technology. And so I think I spent a lot of time internally thinking about that, but also, with people that could solve those issues. The challenge at the time, this is a while ago now, was, demand from clients wasn't there. You're working for a highly regulated large institution. The scale of those sorts of things was challenging as well, and the traditional piece was the payback on strategy. Like, could you make that work in terms of a model? And the answer was almost no every time we looked at it. I think that was a thing for me that said, well, this is certainly the future of finance. How do I sort of make the right moves to move towards it? And then when an opportunity came up at Zodia, I was very interested in doing that. And the rationale was, one, I wanted to move into digital assets permanently and help drive it from Australia. And second of all, one of the things that I felt quite strongly about was, from a retail angle and from a wholesale angle, custody was a natural first step or first stake in the ground, because like many people who hold digital assets, I'm always worried about where my ledger is or what I'm doing on exchanges. And I think in this market in Australia, people are used to not having to worry about that from a banking perspective. So I saw that natural allegiance, if you like, in terms of providing custody. So that's a long answer to that short question, James.
No, that's what a good podcast is made for. So, in terms of, I think we'll skip ahead a couple of questions just because you've touched on the custody side and the demand for that. In terms of what's the elevator pitch for Zodia? What do you guys do? Who do you serve?
Yeah, sure. So the way we pitch ourselves is an institutional grade digital asset custodian, and essentially what we're there to do is security, governance, and drive the regulatory conversation and the alignment. And what I mean by that is, in all of the markets that we operate, where there's a regulatory requirement, we try and build beyond that requirement. And the reason we do that is it goes back to the foundations of why Zodia exists. Is there was a requirement many years ago for a client, a Standard Chartered bank, to get bank-grade digital asset custodianship, and there wasn't that at the time. And so that was where Zodia came from. It was built to really cater for that need, where people wanted that really simple structure of how we manage assets, but the safety and security with it. And I guess for us, it's the trust gap as well. So as regulation matures in different jurisdictions, as we see, more traditional banks and financial institutions come in, we really want to help with that trust gap in terms of allowing institutions to move into crypto and digital assets. And do you think that at some point we'll see the big four banks, becoming these digital asset custodians? Would they be competitors? Are you looking to partner with them to bring up their capabilities to launch their own products and solutions? How is that going to all play out? Yeah, sure. So, this actually sounds like a bit of a setup for me to sell Zodia, but there are two really distinct product avenues that we have at Zodia. The first is obviously regulated custody, and that is our core product where our clients are looking to discharge their regulatory obligations through us, and we manage those assets for them. The second is what we call solutions for Zodia, and that's where we essentially provide the technology out to banks and institutions so that they can deploy the same. And so we do that for Standard Chartered Bank at this point in time, and we do that for a number of other banks that we're working through at the moment. So depending on the type of client that we're talking to, depending on their risk appetite and how mature they are in this space, depends on which way they go.
Interesting. I have to ask, did you hear about the Kelp-DAO hack that led to $300 million plus of Ethereum being pulled off Aave? Did you hear about that?
I did. That's very recent, yes. Yeah.
What do you think in terms of the trade-offs between people that custody their assets in, let's say, a DeFi platform? You can borrow against them. There's smart contracts. You can get pretty decent interest rates when you borrow and deposit.
Yes.
But obviously they're susceptible to these types of breaches, weak points in contracts, hacks on other chains, which then are exploiting Aave, which, it wasn't compromised. It's just that the hackers used restaked ETH tokens as collateral and borrowed legitimate consumer funds. So, what are the trade-offs from your view in terms of DeFi platforms and more centralized custody platforms like Zodia?
Yeah, so I guess what we try and do at Zodia is we try and reduce those trade-offs. That's first point I would say is, so we provide what we call regulated custody and as close to cold storage as possible, which is near real time in terms of movement of those funds or those assets, I should say. And so the differential there is, in a traditional DeFi setting, you have ownership, movement, you're in charge of custody. To your point, you can lend and do all those sorts of things that you want to do. From a regulated custody perspective, you can do all those things as well. That sort of, I guess, the interchange pieces, well, some of those are more regulated in terms of how we operate. So we have to adhere to what the local regulatory requirements are. We have to do all the reporting, governance, etc. And so we feel that's where some of the market will head in terms of, what will be DeFi and what will be in the traditional financial world. I think it comes down to risk appetite. And so from a DeFi perspective, a lot of the time you're dealing with your own assets. So you run your own risk appetite, you build into what you want to do. And if you're custodying those assets yourself, then you manage that and you feel comfortable how you do that. What we deal into is typically clients who are managing assets on behalf of their customers. And so they are required in most parts to have a regulated custodian to manage those. But moreover, their clients are looking for that as well. So a lot of the people that approach us at the moment are sort of traversing through that space of saying, well, we used to manage the assets ourselves and it works really, really well, but now we've got a requirement to do it, through a regulated custodian. So that's where we sort of step in. What I would say is we try and make it as painless as possible, and it's not as challenging as a lot of people think in terms of regulated custody. It's not about putting the brakes on. It's just about making it more safer, reducing risk and managing governance.
Makes sense. And we're seeing a trend, certainly with the more individual investors, even SMSFs now, where I'd say it's probably a 50-50 split between SMSFs and people that want to hold assets on exchange with custodians like Zodia. It's secure. You've got institutional infrastructure behind it. But on the other hand, there's this there's a group of investors that like having self-sovereignty over the assets and ultimate total feeling of control. What's your view on self-custody, and what are some of the trade-offs there? So comparing self-custody with regulated custody like yourself, and just following up for that, what do you do personally as well, if you don't mind sharing?
Sure. So I think what I would say is self-custody really suits that high conviction, sophisticated investors, people that have been in digital assets for a long time. They understand what they're doing, they understand some of the challenges, and some of them may or may not have been burnt before or lost some assets, so they get tighter in terms of what they do. I think again, going back to risk appetite, depending on your own personal risk appetite, depending on the amount of assets you hold, you might want to go between the two. I think where we spend most of our time is the institutional side, so they need control, they need audit, they need fiduciary alignment, and I think they'll always coexist, is my feeling at the moment. And because the use cases are much different in terms of the requirements of a regulated custodian versus self-custody. And I think, I was talking about this recently. I think for myself, I do a little bit of all three. I have some in strong custody, I have a ledger, and then I do some online with exchanges. I think it's good to have all three, but manage the risk appropriate for yourself. That's the piece. I wasn't going to say do your own research, but I was going to say manage your own risk. That's key. Yep,
makes sense. And in terms of, I think some of the pushback around having managed custody from investors was, that we'd seen FTX go under. You've seen Celsius; they lost tens of billions in client assets. There was the Mt. Gox hack. Can you talk to just how institutional custody has evolved from them? Because I think a lot of people that hold custody with exchanges, they kind of point to these terrible examples and they say, well, that's exactly why you don't do it. But how has the landscape shifted? How's the infrastructure shifted behind this space?
Yeah, it's a good question. So key, I guess, on the risk and fraud side, for us when we built Zodia, we went and looked at the 80 most proliferant breaches in the world in terms of loss of assets, and built Zodia from the ground up for that. And then the key, and I guess the maturity side, is getting to that point where we say we're at military grade security or bank grade and above, and being able to stack up the points behind that. So the key in terms of change, in terms of how those exchanges operate, is the regulatory systems that sit beneath them at the moment, or to govern them. And I think if you think here in Australia, we've made some really good strides towards doing that. we're talking about, no commingling of assets, no rehypothecation of those assets, knowing where the assets are held. All those sorts of things are important, but I think what regulated custody brings is those layers of protection as well. So what we provide to our clients is, we do fraud protection, we do checking on the whitelisting, we do chain analysis reviews. We have some detail in there that looks at, when people operate on our UI, etc. So we've got all those layers so that we are, as we say, very, very strong in terms of risk protection. We can never say anything's 100% watertight, and you can't in traditional finance either, but we get as close as possible to it in terms of what we've built.
You mentioned Zodia gets as close as it can to cold storage, or even has some form of institutional cold storage. Could you just explain at a high level what that looks like? How do you guys secure client assets?
Sure. So at Zodia Custody, we essentially manage the private keys on behalf of the clients. We do sharding, we do key management. We store those in offline vaults across the world, so for clients. And then what we do is, instead of it being online all of the time, we have an offline setup where we have a hardware interface which manages the assets back and forth. And that's how we can achieve near real time. So when we say, full cold storage offline, that's a very manual where someone is plugging something in. That takes a little bit of time. But for us, it's near real time where we have that hardware interface on the wallet side. So for our clients, they get the very best in terms of security, but at the same time, they have the speed of being able to manage those assets as well.
Yeah, interesting. So it's not somebody running between lockers with a hardware key. It's kind of built into the actual it's built into the hardware itself, but stays offline until it's needed or a transaction is sort of requested.
Correct.
Very cool. In terms of, I'm going to switch gears just a tiny bit here. In terms of AI, I don't know if you're invested in the equities market at the moment, but it's absolutely going insane. Lots of stocks, posting, 20, 30% earnings growth and, gaining the same in price. In terms of how AI is being used within Zodia, but also some of the threats that AI presents, new threats to custody players. How are you thinking about this as an opportunity and a challenge?
Yeah, good question. So I think on the more operational side, we use AI in terms of threat management, those sorts of things. So understanding, I mentioned before about, let's say you, James, are set up on Zodia and you're operating assets with us. So we use AI to analyze when you're online, what typical transactions you're doing, those sorts of things, to limit challenge there. I think I won't go into detail on the other side in terms of how we use it, but I think in the market at the moment, what we're seeing in terms of threats into this industry is there are a lot of people who are using AI to train in terms of get data and information and upload, so they can present as close to a client, as close to a member of our business as possible. And I think that's the biggest challenge, is that we're seeing a lot of that in terms of, they're really, really getting confident in terms of identity theft. I think they're really getting confident in terms of, how they position themselves. That's something that we will always have to manage, and I don't think it's something that's unique to digital assets, but it is certainly prominent in the industry, both the financial services industry and the digital asset industry. It's just something that we're always going to need to be ahead of. One thing we do for ourselves as well is we do, as many challenges to our platform as possible. So threat management, responsible hacking, those sorts of things. We do everything we can think of to try and challenge ourselves to keep ahead of that. And I think it's not something that we can ever complete. It's going to be an ongoing continuum.
Yeah, I think Sam Altman's other company that he's got major shareholding in is a company called WorldCoin. And I mean, it's very Black Mirror esque in what it does, but it's quite useful in a way as well. So it scans, the human iris, and apparently everyone's iris is incredibly unique, and it's a way of, proving proof of humanity, effectively, for authorizing transactions, accessing your digital records. But of course, you would assume that at some point AI is going to be good enough to, if it gets a hold of a picture of your iris, then it could potentially replicate that as well. And so, in a way, I see one of the only last bastions of proving who you are, who you say you are online, is going to be signing something with a private key, which blockchain in a way is kind of very, very well positioned for this, as opposed to perhaps more in traditional finance where there is no private key signature happening, or less of that. It's more exposed, would you say, than digital assets?
Yeah, I think so. It's a good point. I hadn't thought about it, to be honest. But I think, yes, in a traditional finance world, they have the same challenges, if not more, because you're exactly right. You don't have the private key set up. So, they can do dual authentication or two-factor authentication, things like that. But pretty rapidly, that will be challenged in the market as well. So it'll be, those biometric markers. I don't want to say we're going to have to, put blood on a sensor or something like that, but I think we'll need to keep evolving that as we as the fraudsters evolve. I think, yeah.
I think blood on a sensor is something that you have just got some people working on right now. So
yes, yeah,
good work. So. On the regulation side, we've just had the amendment to the Corporations Act received royal assent earlier in April. How is this bill going to impact custodians like Zodia, but also for some of the, let's say, smaller players in the digital asset space? How do you think it will impact them? What are they going to have to do to make sure that they're still aligned with these new provisions?
Yeah, good question. I think, what I would say, it's a big step forward in formalising some of these things. I think the industry's been calling out for it for many years, and I always, because of my background, being a regulated market background, I always say, good things do take time, and so I think, the regulators are doing the right things at the moment, making the right decisions. And I would rather that it go that way than quickly and miss some things. I think it's necessary for trust and for scale in the market at the moment, and I think it brings clarity for institutions to engage. So these things are really good steps forward. And there's a lot of people on the DeFi side that say, well, we don't want that. That's great. So it's a bit of a split room. But there's also, part of this industry that requires growth, and they require institutions to engage. And I think this, that regulation brings validation is what I always say. It's probably my catchphrase, and I think that's where we're going. We need validation, and we'll need participation from institutions to grow this market. And that's what's happening, what we're seeing overseas. We've got that sort of, both are happening at the same time. And if we had one without the other, Australia would fall much further behind, and I think that's not what anyone needs in this industry in Australia. No. I think, going back to your other question about the smaller players, yeah, I think it is challenging. I think, as I said, raising the bar is necessary for trust and scale. I think, as I said, institutions won't enter without those safeguards, so we needed that. I think the challenge for smaller companies operating in this market, where they might be classified, let's say, as a custodian due to the assets they're holding and the time periods, etc., it can get quite challenging in terms of the capital required, the governance and reporting required. And so, what we would say at Zodia is, we want to see more participants entering this market to offer the same as what we're offering. I think that's, competition will bring value. But at its infancy, what we're doing for the smaller players is we help them to take that off their hands. So we'll do the regulatory side, we'll do the reporting, we'll allow, when our license comes through, I should say, we're in the final throes of that, but we really want to help those smaller companies to discharge those regulatory obligations in terms of from a custody angle. And I think that's where we're going at the moment. I'm hoping the future is a more tiered approach to allow smaller players to operate much more easily, especially from a capital perspective. But again, I also take the angle from ASIC that those things are really challenging to do. So hopefully we'll get those in the future, but I think we're going forward at the right way.
Yeah. Switching gears onto stablecoins now. So Zodia recently became the first custodian to support AUDM, so Macropod's AUD-backed stablecoin. Why is that a big deal? For that, and if you could just explain briefly what stablecoins are. I still kind of take that for granted that when you go outside of the crypto circle, people are like, what the hell is a stablecoin?
Yeah, sure. So the way I sort of talk about stablecoins is they're the traditional, they bridge traditional liquidity with blockchain rails. So if you think about in Australia, so AUD liquidity with blockchain rails. Why it's important is it enables on-chain settlement in local currency, and I think what we're seeing at the moment is, I think most days I see a little news or data point saying, adoption of stablecoins is absolutely going through the roof, and I think it's a really good signal at in the movement of institutions into digital assets, because stablecoins linked to a fiat currencies such as AUD, USD, etc. One for one, that lessens the risk in terms of price volatility, of course. You obviously have liquidity issues you need to deal with, but I think as we see, these grow in Australia and globally, it's a good thing for our industry. And I think it's a critical step in terms of institutional adoption for Australia.
And where does what does Zodia do in that sort of space? Like, where do you fit in along the stablecoin value chain?
Yeah, so what we do is we essentially allow our clients to manage those stablecoins within the wallet infrastructure that we build, and then we also provide the custodianship for those assets. So essentially much the same as we provide for all of the other coins, networks, etc. That's what we do.
And what about the underlying assets? So let's say if it's the actual Australian dollars that are non-blockchain based, do you custody those and then issue the tokens, or is that somebody else does that part?
No, yeah, we don't do that. So yeah, pretty good question. I think each of the stable coins is different in terms of how they do that. And I won't talk for those stable coins, but I think typically some will do the mint and burn in-house themselves in terms of providing those assets back to the clients. So they'll hold the Australian dollars in-house and move the assets off. Some will do it on certain exchanges such as Coinbase, depending on what the requirements are. But there's lots of different options there. All we're looking to do is where there's a requirement to maintain those assets for a certain period of time in a safe way, we do that.
Gotcha. And then over the next sort of year, several years ahead, so Chainalysis put out a recent report saying, last year, 2025, we had 35 trillion of transaction volume activity in stablecoins. About 28 trillion of that was real economic activity, so actual transactions with an intended purpose, not just a transfer. I think it's more than double that already, kind of just in this part, the first quarter of this year, and they're forecasting crazy numbers. So 1.5 quadrillion was sort of what they, if the compound annual growth of stablecoins continues at the current rate, we could get to 1.5 quadrillion by 2035. That's a crazy number, but I also think it's entirely rational, at least the way I think about it, just because it's a better way for money to move around the world. It's significantly faster and cheaper. I went to a stock and investment advisors conference last year in Sydney, SIAA, and there was people were talking about how it's exciting to be moving from T plus 2 to 3 day settlement to potentially T plus 1. And in like some of the Asian markets, they've been doing T plus 1 and even T plus 0 since like the late 90s. We just haven't got our shit together, it seems, in our markets. But kind of lost the question I was working towards there, but sorry, yeah, that's it. Where do you see the tokenization of other assets? So beyond stablecoins, real world assets. Where do you see that going over the next, several years, and what role will Zodia play in that?
Yeah, sure. So I think you're right. I think we start with cash and deposits, and then we move towards treasuries. Is probably the three I think are happening right now, is what I would say. And then I think where you were going is it unlocks that real financial utility for institutions, and that brings meaningful adoption. I think what we're seeing at the moment is bonds, particularly government bonds. There are a lot of projects of work programs of work within Project Acacia that's sort of targeting those sorts of areas, and I think that's exactly where we're going. I think there are some really great pieces of work in terms of programs not only here in Australia but also across in New Zealand around tokenising property, so that real world asset adoption is getting stronger and stronger, and a lot of those are utilising stable coins because it's as I said, it's that financial utility. It's easy for people to do. They understand the dollar for dollar, so it's almost like a simpler way of moving into the digital asset world rather than sort of utilising some of the other big caps.
Mm-hmm. So you've got a talk coming up at DECA later this year. What are you going to be talking about? What does DECA do? What's your role there?
Yeah, sure. I don't know what I'm going to talk about yet. No, I'm my role with DECA. Look, I'm a member of DECA, and we are as a company as well. And I think what I would say as as a peak industry body, they are absolutely a standout here in Australia. Led by Miro's absolutely legend in this industry, and they've put on a lot for this industry over time in terms of the DECA conference. They're doing a lot of work in Canberra. We were there in February with them. They are driving this industry forward, so we are really happy to support them. What I'll be talking about is more institutional alignment of custody. And how we're supporting that. And the biggest thing for us, again, and the way I explain to people that have less information or less knowledge about how digital assets work versus fiat currencies is, we're there to support institutions in, alignment of a bank account and a digital wallet, and making it more practical about the alignment of how those work and that path for the future. And I was sharing this example the other day. There's a couple of banks around the world doing this already, where they're utilising fiat rails in terms of fiat bank accounts, and then digital rails, digital wallets, and they're just trying to create that practical alignment of how those two work, the practical alignment of what that means in terms of, okay, if I convert my fiat to stable coins and move them across to the US, what's the practicality of liquidity at the other end? What is the price differential? What is the speed differential? And allowing people to understand that there's value in terms of this new industry, in terms of, I don't want to say disrupting the financial service industry, but bringing more value and reliability into it. I think that's really key at the moment. So that's what I spend a lot of time doing. But I think 50% of my job is education. Hopefully education in the right way, but that's the biggest thing for us at the moment.
And just a few closing questions for you, Brian.
Sure.
Outside of Zodia and digital assets, what gives you energy? What do you enjoy doing? Yeah, look, I think it gives me energy and takes energy. I've got 3 kids, so they definitely do both. I'm lucky enough to live really close to the sea here in Sydney, so I spend a lot of time down at the beach, whether it's swimming or just running around with my son or my daughters. But yeah, that probably gives me energy. But I think the biggest thing is just seeing that we are, I don't want to say early, but we're in the throes of starting something really cool here in terms of digital assets, and I think it's a very good space to be involved in. If you had to, not convince, but talk to, we're talking to a lot of financial advisors at the moment, estate planners. To someone that's skeptical, who's got a book of clients, who's considering helping those clients get into digital assets, what would you say to them that they need to know that maybe they don't know?
Yeah, I actually noticed the piece on your wall there when we started talking. I think I get a lot of questions sometimes where people go, "Oh, sell me, blockchain and digital assets," and a lot of the time I remove myself from those conversations because I think we're much more, we're much further down the track than that. But I think what I actually advise people to do is just start reading about digital assets, start understanding what they're doing, how they're working, especially advisors, because in a lot of scenarios, the advisors are talking to clients, not realizing that the clients have already done that themselves, are educating themselves on different assets, different investments, and digital assets and cryptocurrency are a large part of that. So I think understanding it, doing a lot of research in terms of how they operate, what it means to manage them as well. Again, custody, understanding that. And because I think what will happen is clients will ask, and if advisors don't have a clear framework or understanding, then quickly you're out of the loop very, very quickly. We've moved from, people being interested in it to people investing in it, and that's moved really quickly, I think, is my view.
Yeah, and I think just with the amendment to the Corporations Act as well, there's a window where advisors and people that want to talk about digital assets get it on their approved product list. Previously, that was sort of a grey zone and was one of the biggest blockers to them not doing the research, because they're like, I can't recommend these products, can't talk about them, so why would I bother wasting my time? That kind of reason for not doing the research is now gone in a way. So I think I agree with you there. If anybody wants to get in touch with Zodia and talk about your custody services, some of your tokenization services, what's the best place to go? Should they hit you up on LinkedIn?
Yeah, absolutely. So LinkedIn is probably it's the most challenging. I think we get the most traffic through there, but please do it. I'll always respond. I think onto our website as well is really great. It's got a click through piece in terms of engagement with us. It'll go through and we can give you a call about what you need. But yeah, LinkedIn's probably where I'm the most vocal, and hopefully you can follow along.
Great. And is that zodia-custody.com?
Correct.
That's the official one. Great. Well, thanks so much for your time, Ryan, and really great to talk with you about custody and digital assets. Appreciate it.
Thank you, James. Appreciate it.